The average price of a home in Canada has dropped 18% since the peak in 2022. When we go back another 2 years prior to that, that's when prices get even more interesting. The April 2025 sales data for Canadian homes is out, and we are going to show you the most important elements and discuss the man in charge of home prices going forward. That's right, the new Minister of Housing in Canada and his agenda. It just might surprise a few Canadians. Also, the unemployment rate in Canada has increased, and the pre-sale world, it just continues to collapse even further. Here is what is important in Canadian housing this week. Off the top, let's talk about Canada's new housing minister. And for those of us in British Columbia, it might be a bit of a familiar name because it is Gregor Robertson. He was the mayor of Vancouver for 10 years, from 2008 up to 2018. During his time as mayor in Vancouver, home prices increased 189%. And homelessness, the amount of people living on the streets, well, that increased by 38%. Chosen by Carney for his, quote, type of experience needed to manage the future of Canadian housing. Okay. Early insights into what we can expect, what Canadians can expect from Gregor, was noted in a Q&A session video that's been making the rounds online here, where the reporter simply asked, do you think the price of housing needs to go down? And without hesitation, Gregor answered, no. I think we need to deliver more supply, make sure the market is stable, and they need to deliver more affordable housing. Kind of contradictory, but again, very candid in his response. So while it's obvious, it does beg repeating. The government does not want the price of Canadian homes to go down. Trudeau said it a year ago, almost to the date, housing needs to retain its value. Do you remember that comment? And now you have the new housing minister saying that prices do not need to go down. So if you're asking yourself, why would they say this? Well, it's important to remember that the vast majority of Canadians are homeowners. Over 2/3 of Canadians own their homes. And, who would they rather elect? Somebody who's going to protect the price of their most valuable asset, or somebody who says they're going to erode their net worth? The majority of voters obviously are homeowners. The majority of politicians are homeowners. The majority of the wealthiest and most influential Canadians, people with power, are homeowners. You see where this is going. So Gregor is faced with the goal of making homes affordable without lowering the current home's price or value. Is this an impossible task? Well, it's certainly not going to be an easy one. Now, how can this actually be done? Or can it even be done? Well, one path to this may be that, what if home prices in Canada remain stable for like a decade or 2 decades, ultimately allowing incomes to just try and catch up a bit and make the affordability ratio more in line with the average income in Canada. But here's another idea, and this is not one that they're floating, but hopefully somebody's listening, and maybe this carries some weight. Build homes in Canada and sell them at cost. So the first part, building for cost. Okay, if we started to see a lot more homes being built, this would obviously boost the employment within the housing sector and all the knock-on effects that it has, right? Construction is one of the largest employers in our country. And if they started building homes or even double the homes like they are forecasting or promising, obviously that would see a tremendous amount of strength in that sector regarding employment. Now, the people building those homes, they're all paying taxes, right? So the government starts to see revenue there. And then the next part is the government would remove all, or at least a high percentage of the DCCs, right? The taxes, the city fees that they collect, and say, okay, for this section of housing, we're going to lower that to help make them more affordable. And then lastly, you essentially remove the profit that a developer would have seen, right? We've got Carney here saying that they're going to have a department within government where they are going to build homes. They're going to be the developer. So obviously they don't need a profit. So that gets removed as well. So voila, with no developer profit, with a high reduction in the taxes and fees that are there, you ultimately could bring houses to market, 25% below the current value of the one next to it that had all those fees. Maybe that's enticing. Maybe that works. And then going forward, maybe have a price cap that maybe somebody lives in it for 8 years and they go to sell it. Well, it doesn't go up at the same rate, or maybe down at the same rate as the rest of the immediate area. they put a price cap on what that home can be sold at. Maybe it's even the exact same price. They bought it for 800,000. They can only sell it for 800,000. Maybe it just goes up at the same rate of inflation, for example, but there is no room for these things to lift at, above average or at the rate of appreciation that maybe the rest of the country or immediate area is seeing. Floating the idea by, I don't know, love it or hate it. I'd love to hear what you think.
Well, I've got a couple thoughts with that. First of all, I feel like usually when the government builds something, it's usually, I mean, historically speaking, it's usually way over budget. It's usually way too late, and it's usually very poor quality if private investment hasn't looked over it. And I think, they could certainly remove the DCCs. I mean, the amount that the DCCs have gone up is atrocious. But I think, if we cap sort of what these affordable homes would be at the costs, as they go up in value with the rest of the marketplace, I think if you cap the values on those things or you fix their pricing, then the value of everything else will explode. And I don't know. I personally think that the government needs to take a completely different route. I think they need to shrink their size. I think you need to bring in way more competition, way more private industry who will compete against all of this. And you have to allow people to fail. Businesses, not all of them can be bailed out. And the government should take their finger out of bailing out things and let a free market be a free market. And I think you'll eventually start to find some equilibrium, but it's going to take some time. I just, when I hear about, Gregor Robertson coming in and saying these things like the price of housing can't go down, that just speaks to the inflationary tendencies that the Liberal government is going to do. They're going to spend. He just told you he's just going to spend and spend and spend. The price isn't going down. The value of you being able to buy something, that value is going to go down. And that's unfortunate, but that's, I think, where we're at today. Speaking to the greater economy too, we'll look at the unemployment rate in Canada. It rose by 0.2%, so up to 6.9% for April. That is actually an 8-year high outside of COVID. Average hourly wages rose 3.4% year over year to $36.13 last month, while total hours worked were up a meager 0.9% compared to April of the previous year. With that said, they're both positive metrics. BC fared a little bit better overall, where employment rose by 0.2%, gaining 6,000 jobs in April. I wonder, though, how much of those jobs were election-based jobs and things like temporary jobs and things like that. This puts the unemployment rate in BC. It has increased by 0.1 to 6.2% in April. So April's job report indicates a continued softening in the Canadian labor market as of this spring, as ongoing tariff uncertainties cast a shadow over the nation's economic outlook. With the effects of these trade barriers reverberating across multiple sectors, the Bank of Canada may be inclined to cut rates at the upcoming meeting in an effort to mitigate some of this economic strain brought on by increasingly volatile global trading landscape. We'll see.
Perhaps a portion of the people that became unemployed were in the real estate sector, maybe even, of course, the pre-sale market, because that continues to get absolutely pummeled. I had mentioned a couple of weeks ago about a Burnaby pre-sale project that was canceled, and now the details are basically available. So I want to share those with you. The project was called Bassano by Bofo Developments, and the company launched their first of what was going to be 4 towers, totaling 1,200 units. They launched last July. And, honestly, it was with a bit of hope that the market was going to turn, because they launched at a very difficult time. But as rates were coming down and there was early hints back then of a bit of a market turn, they felt like it was the right time to launch. Only, though, 44 units of the 318 that were available sold between July and December. And then when the new year hit, well, just like most of the rest of the market, sales dropped completely off. So the company, well, they decided to pause the project, and they returned all the buyers, all 44 of them, who had put forth their deposits. They received their deposits back with interest. and the company Bofo is essentially waiting for better market conditions to potentially bring these projects, this building, back to the market. And you got to think, like, Bofo, this is a company that's been around for 50 years, half a century, and they've got pretty good intel on the market. So this is obviously an unusual and uncomfortable position for them to be in, and kind of signals to the landscape how incredibly challenging pre-sales are, obviously in Toronto, but this is a local building here in Burnaby. Typically, quote unquote, they would see about 90 units sell in the first 3 months, and at 44, they were just under half. And even though the BCFSA recently changed the rules to allow developers to obtain their construction financing for sales over 12 months, they extended it to 18 months. Well, Bofo looked at the landscape and said, it's not enough to move the needle to get us to have any sales. I mean, sure, you go back 3 months and you've sold 0. What's extending an extra 6, right? It's just not going to hit the metrics that you need. As you can imagine, there's no current set time frame as to when not only the first, but when all 4 buildings are going to be launched. So, there's 1,200 homes that were meant to come to Burnaby that are now in limbo. You also may have heard the recent news about Vancouver's largest presale firm, presale marketing firm, Rennie. There was a couple quotes from their recent change where they laid off 25% of their staff. I think it was 25% of 109, if I remember correctly. Their chief intelligence officer, his name is Ryan Berlin, he quoted as saying, "It's like this cascading waterfall of bad news." And I'm sure we can all emulate that. It's hard to find anything promising in the presale world right now. Mr. Berlin, said that many people, obviously within the industry and presale industry, are not expecting the market to start functioning anywhere near normal for at least 2 more years. So that's the runway that a lot of professionals expect for pre-sales to even start to see the light of day again. More data for you. There are currently 2,500 condo units that are complete and unsold. And that is a lot for Vancouver. And it's expected to continue to climb, hitting somewhere around 3,700 units by the end of the year that are complete, that nobody built, that the developer has been trying to sell for years, and they're just sitting. Now, what's interesting too is that there's no government or local or independent agency that currently collects stats about how many pre-sale buyers are not completing their purchases. So we don't really know how bad or how big or how small, that issue is. What these developers are saying, though, is they're seeing a lot of pre-sale buyers bringing in family members to basically bail them out. They're being added to the contract so they can then qualify for the mortgage because for whatever reason, they didn't pre-qualify and get that pre-approval 3-4 years ago like they can. I'm still baffled by how many people don't know they can do that. But here's another reminder. If you buy a pre-sale, get pre-qualified 3 to 4 years prior to completion. It only makes sense. Now, some people, of course, are simply walking away from very large deposits, thinking that might be the end of their troubles. It's not always the case, right? These pre-sale contracts heavily favor the developers and, well, they're pushing back. In Toronto, for example, developers have initiated more than 100 lawsuits in an effort to get the full purchase price from pre-sale buyers. So you bought something for $800K and you walked away from your $160,000 deposit thinking it's done. Well, the developer might reach out and say, "Oh, no, you still owe us another $640,000. So it's not something you want to take lightly. So understand your pre-sale contract if you're nearing completion and having some issues with potentially closing. According to the stats available in Toronto, there's about 24,000 units in the pipeline that are either completed or, again, under construction during the first quarter of 2025 for the Toronto and Hamilton area. Massive number. Prices there have declined about 10%, averaging $1,524 a square foot. But, compare that to the peak in 2022. It's, again, they were obviously up $160 above that per foot. Locally here in Vancouver, prices have also come down, but nothing in downtown Vancouver, currently the most expensive part of the region, can get more than maybe $1,800 a foot, which still sounds like an egregious number. Do recognize, though, that during like that blow off top COVID era, there were some pre-sale projects that were listed and selling at upwards of $3,000 a square foot. And yes, those are in trouble now. There is another tower, and similar to the Bofo story with Bassano, there's rumors There's a couple of people that have reached out, not clients, but people that actually had bought into this project that have kind of gotten wind that it's being canceled. It's downtown, it's luxury, it's been on sale for a couple of years. And I'm not going to say the name until but it's, again, there's just more and more stories of condos, towers, projects not coming to market or essentially being canceled after trying to sell. And lastly, the last thing on here, more rumors, but, boots on the ground here. We obviously talk with all of our industry professionals daily, and we all understand what's happening out there. There's a small, mid-size pre-sale marketing firm in Vancouver that's rumored to be going under, or at least they're doing a major restructuring. And I'll bring more details to that to light when I can. At this point, I don't want to get ourselves in trouble, but it's just to share examples and stories that the pre-sale world is getting, well, again, pummeled. And at this point, there's no sign of it turning around anytime soon.
Dan, I was chatting to a couple agents that I talked to in Toronto yesterday too, and I heard some very interesting information from boots on the ground there. First of all, on the condo side, this particular pre-sale buyer bought back in 2021 or 22, paid $1.50 million for a one bed den in Toronto. It got appraised recently because completion's coming up for $810,000. And then they tried to assign it and got an offer at $670,000. And so, talking about walking away and leaving your deposit on the table, but at the same time, them being threatened to be sued by the developer as well. I just wonder, a lot of these people, they don't have the balance, to come up with, to fund this. So I don't quite know how the developer is going to get their money, which is the other part of this. So we'll see. And then on the flip side though, Jen, the same realtor telling me they were doing a deal in the Danforth area on a detached home, 17 offers yesterday. So is very, very segmented, this marketplace. And certainly the condo market is oversupplied and underutilized. They're building things that nobody wants, and that's problematic. Moving over now to the stats in BC here. So for all of BC in April, we had 6,435 units that were listed. This is down 14.6% year over year, and prices are down 6.1% year over year. When we look at sales dollar volume, that dropped more than the average sales and price. It's down 20% year over year, and 27% lower than the 10-year average as well. Meaning there is more activity at the lower price points. And when we look at year-to-date sales dollar volumes, it's down 12% from last year. So already a slow year. The slowdown in sales was predominantly in the Lower Mainland. And this is also interesting, as most other regions actually saw an increase in sales volume year over year, including Vancouver Island, the Sunshine Coast, the interior of BC, and northern BC, all saw higher sales volumes than this time last year. And this speaks to people selling in the Lower Mainland and moving to more affordable areas all throughout the province.
So the national data came out actually today, about half an hour before we recorded this. And this is for all homes data in Canada for the month of April. So let's dive into it quick. I wanted to give you the top line information that I find most relevant. Month over month home sales were basically flat from March to April. They lowered only 0.1%. So this is actually quite a change because it marked a pause in the trend of declining inventory that we've been seeing since the beginning of the year. Now, just last week's video, I suggested that sales volumes might be nearing a bottom. Of course, the comments suggested otherwise and that I had no idea what I'm talking about. But, here's the first piece of data showing that it may very well be the case. We'll see what happens moving forward, of course, but let's keep the conversations going, right? I'm obviously not right every time, but when you're in the industry day in and day out, you have some insight, some foresight, and some information that maybe some others don't have that feel like they know more. All good. We're here to keep informing. Year over year sales unquestionably lower, right? We've been talking about the 4-year downward trend for some time. 10% lower is significant because, of course, last year was slow. Though, do note that new listings fell as well. They were actually lower month over month. this carried over into active. The total active listings actually dropped too, which is quite a rare phenomenon for April. April typically is a peak month of the annual cycle. So active listings dropped nationally 1% from the month before. The total listings across the country now, I mean, we're sitting at 183,000 active homes. That's up 14% from this time last year, though big picture, it's about 10% below that long-term average. And of course, and understandably, this data is not equal from province to province, right? British Columbia and Ontario are experiencing notable increases in active listings, while the opposite is true in practically every other province and region. Price-wise, let's get into prices. What happened? Prices saw a notable, again, decline in April. Month over month, prices dropped 1.2%. That's a big month, right? I mean, you extrapolate that over 12 months and you get the idea, or you're well into double digits there, what could happen annually. But year over year right now, national home sales are down 3.6%. Not a massive number, but again, the lower national price, well, it's being pulled down by Ontario and BC, as every other province and region actually have higher prices year over year. So BC and Ontario, understandably having the vast majority of the populations within our country, when those two provinces see lower prices year over year, then that pulls down the whole country, right? BC, as Ryan just mentioned, down 6%, Ontario is down 5%. But let's talk about peak pricing. Why not? National home prices, as we mentioned right off the top, are down 18% since that 2002 peak. So if you were someone who bought a home 3 years ago and you're listening to this going, oh my gosh, my home's down 18%, might not feel great. You're not forced to sell probably, but you've lost a ton of equity in your property. But let's go back just 2 more years to 2020. How do prices compare today from 2020? Well, they're up 31%. So, if you bought a home 5 years ago, maybe you're feeling decent about the amount of equity in your property, right? It's all about perspective. And here's a great example of time in the market and being able to weather different cycles typically means that you're going to have more equity in your home than when you purchased it.
Yeah, going long with real estate has always been the play. People who go short on real estate, it can be a very expensive game. With that being said, let's have a look at rental rates and a quick update here. The Toronto area just saw its first meaningful increase to their rental rate in over a year. Unfurnished one bedrooms went from $21.26 a month in April up to $21.48 in May. That's $22 a month. It's not a huge number, but it's still an increase. It's still also just the first increase in 12 months, so it's worth mentioning. Rents remain well under prices from 1 year ago, where the average was $22.39. And with the immense amount of new condos completing over the next couple of months here, it's possible the increase was a one-off, as we'll see further softening. It's likely to take place, but we'll keep you updated as it progresses over the coming months here. Alberta is also seeing rental rates on the decline. Unfurnished one-bedroom units in Calgary dropped 7%. From $16.61 to $15.45 over the past 6 months. And Edmonton is also down 6% over the same 6-month time frame, dropping to $1,300 from $1,375 a month. So definitely some renters continuing to get renewed relief there for the most part. And you've got landlords that are likely struggling to make ends meet.
Last segment today is on the renewal cliff, as it has been dubbed. And I mean, if you've been following this channel for a while, you know that I've been saying for over a year now, the renewal cliff will be a nothing burger. It just won't happen. And the Bank of Canada, well, they've just released their latest financial stability report, and they tend to agree. The report states that the average mortgage payment will rise much less than anticipated on renewal. The average mortgage payment was forecasted to increase by about 15% in 2024, which was considered to be manageable by most people, but still enough to obviously throttle consumer cash flow. But the BOC's financial stability report, their FSR, shows reality has been much kinder to borrowers. Quote, in this year's financial stability report, the bank highlighted that the pressure will remain through 2026, but crucially, it could be lower than anticipated last year, thanks to downward adjustments to expected interest rates. And that quote came from Shelley Koshik, the senior economist over at Bank of Montreal. She points to the FSR projections versus the reality, which show the average monthly payment climbed 4 points less than the forecast. Similarly, the BOC's updated outlook sees payment growth roughly 5 points lower than previously forecasted. To end it, mortgage payments going forward from record low rates to a less than 5% increase on renewal in 2026 is considered a shockingly low risk. So, the way things stand today, they're pointing to no renewal cliff. Ryan, last words on this week's updates.
Really, like my mind goes to Gregor Robertson with his note on not making home prices more affordable. And I'm not going to pretend like he doesn't know what he's talking about, but if you look at several other instances over the last couple of 100 years, where you look at pricing in many economies, there's this like overall like thought process that the economy must continually expand in order for everything to grow. When in fact it's not actually the case. There are dozens and dozens of examples of when economies have contracted and the prices have fallen over a decade by 30 to 40% in some instances, but GDP went up, and that is because cost also comes down. And so while we're sort of in this like financialized world where we always want to see higher and higher levels of GDP output, like higher numbers of overall top line revenue, but that is like the worst indicator for overall productivity, when the truth is prices can come down so long as cost comes down and we can have a growing GDP. And I just think that that's lost on so many people because they're just not looking at other ways as to how this can be done. We don't need government to constantly try and solve the problems that they create. We need more innovation from the private sector. And I think I'm just going to leave it there.
Perfect. That is this week's update. Thanks as always for tuning in. We will be here next week and hope to see you then too. Have a great weekend.